morning, everyone. Welcome to the Metal Markets. I'm your host, Market Stalker D, aka Deeyana Angelo. If we're meeting for the first time, I have been trading for almost 20 years at this point. I've been with Topstep pretty much since 2015. I was their first female funded trader. That's how I got to meet everybody. And since then, when they came up with Topstep TV, I joined them in August 2023. And I've been with them ever since. The purpose of this show is to have a look at the levels first and foremost. Now, this time of day on my products, which is the precious metals, base metals, and energies markets, it's a little too early, and we typically get into a weird period where there isn't too much good movement. The tape is super slow. So I take this time to have an overview of the relevant levels that might come into consideration during the day. However, as we get nearer to the end of the stream, we may get some pretty decent setups and maybe we get a trade in, but again, no promises on that. So we are going to have a look at how the options chain is looking, where the average ranges lie, and for the metals, we want to see what Tokyo did as well. For that purpose, I'm going to be using copper, which is this chart, but also gold, and then we can also have a look at crude oil, which I've traded since 2013, traded it for various prop firms over the years, and crude oil is in a much higher volatility than it has been for 2.5 years. And I'm very pleased to see that, not pleased about what is causing it, because it's obviously war. But at the same time, I'm kind of glad to have my product back. All right, let's begin with copper. And let's start on a large time frame. You don't want to start your week staring at a 30-minute chart because it's not quite going to be good enough. From a big bird's eye view, this is the weekly time frame. There was an event of somebody blowing out, whether it was an institution or what, we'll never know, but somebody blew out massively on copper, and this was the result. So this huge liquidation candle, it took the entirety of the summer to actually even get through 50% of it, and then they kind of managed to stabilize a little bit, and then they carried on higher. So now we have a new all-time high, sitting up at 665.50, and since then we've created some very decent supply areas with good moves away. But the issue now is, where does this thing stop, and will we go lower? And this is where the options chain with some of the more weighted areas can help. I am seeing an area further down on the weekly time frame. We won't be trading from a weekly time frame, okay? This is just like bird's eye view. Where are we in the chart location? Are we in the middle? Are we at the top? Are we at the bottom? Do we have any reversals there already? So that would be a no for now, because it's a new week, so we cannot take this candle. It's still subject to change. But I am interested in this demand zone, kind of in the middle of nowhere on this time frame. But as we kind of start to fall through the lower time frames, you will see that it's actually not bad looking at all. So when I go down to a daily time frame, we're looking at a zone in and around 514. So it's quite a bit lower than what we are right now. I'm personally not in huge favor of longs just yet. Now, this may change as the time goes on and as I get more market generated information, because we are talking about intraday, right? We're not talking about doing swing trades. We're talking about doing the right thing for this time of day. And I think it still has room to the downside. Let's have a look at a 4-hour chart. And again, we're going to go left, scan left, all the way to see where the nearest thing came from. Unfortunately, we seem to be missing data here. So I'm just going to have a look at the 4-hour time frame on my other charting platforms. to see exactly where that is. Yeah, so even that one is telling me that around 520 we do have a strong area of demand. Now, like I said, unfortunately we don't really have enough data for this, but 514 seems to be, from 514 to 520 is the area. So it's somewhere around here, let's say. Now, this is the point where I like to go to the intraday time frame, starting on a 30-minute chart. I don't really look at the hourly chart. I think it's bigger than what I'm looking for in intraday, and 30-minute time frames are traditionally TPO time frame. That's a concept from Market Profile. So therefore I start to have a look at what Asia did first and foremost. So here's a Tokyo high created around 2 a.m. This is something that happens, I'm in England by the way, so 2 a.m. is my time. This is something that happens a lot in metals. So they will typically have a bit of a fake out at Globex Open. Then you'll have the first hour of Tokyo that doesn't go the correct way. And even when it does, that movement tends to finish between sort of 2 and 4 a.m. my time. Not always, obviously, sometimes it's a pretty decent movement, but on a vast majority of days, that is the time of day for the Tokyo session when the highs and lows are created. And that's exactly what we have here, right? So we have 2 a.m. candle reaching the high, unable to go through this value area from the COMEX session, and then turning around. So now I'm looking at the full range of Tokyo as my orientation point. In this context, VWAP is pretty flat, so it's not really giving me any indication, and therefore VWAP is not something that I'm interested in. What I am interested in is in this Tokyo high overlap with the COMEX Friday value low. Those areas tend to be pretty good areas of interest during COMEX, okay? Something that can happen during COMEX is that we get to open, like, let's say, just underneath this value. Then we try to test into the value and reject it. So that will be one possibility today. Value low reversal, as I like to call it. For that, you absolutely need to open outside the COMEX Friday value. So we cannot be inside it, because that kind of changes the hypotheses on the day. But what can also happen is that they decide we've fallen enough, and then you see a value acceptance, in which case I would expect them to run at least to this GEX2 level at 540, maybe even rotating throughout the entirety of this area, and ultimately exceeding and exhausting the range, the average range that this product has put in over the last 10 days or so. I do use average ranges as levels, and those levels can be reached during London, but typically the real move away from them comes during COMEX. Okay, so sometimes you can smash into the ADR high or ADR low and then just hang there, chopping and exhibiting some kind of gamma pin behavior. Today we don't really have super meaningful levels around the ADR low and ADR high. The only thing that's closest is GEX2. Now, when I'm creating my anchor points from the options chain, I don't just use the open interest. I use my own sort of proprietary way of figuring out which level is the most important. And when I look at things in that perspective, 520 comes up. Even though it's a weaker put wall, there's a bit of an anomaly there with the implied volatility. And then I see that we also have the 550 level higher up, which was an orientation point at one point last week. Then we broke through it, went to 530, and immediately bounced away from it. I did call 530 on a Thursday, I believe. But even I didn't think that it's going to bounce like this, right? So I didn't take it. But I took some of the chunk of the move towards it, because these levels are magnets when they when the price really starts running towards them. Now, to the downside, if I'm looking at longs, I already said that I see a better area between 520 and 514, and that would mean that we would reach this ADR low and this weaker put wall with some anomalies in it before doing anything else. So really, for me, at the moment, we're kind of in the no man's land. Middle of nowhere, VWAP is flat. I mean, I suppose you have a bit of a supply from Tokyo High, but the thing with Tokyo High and the London session, typically they like to take out those levels. So where we are at the moment is really not ideal for me, and that means no action. Not just, oh, let me click a button and see. No, the probabilities here suck, right? They're terrible. And that's why I don't think that copper is going to be giving me anything at the moment. But basically, I would like to maybe consider being a buyer once we reach the zone lower down. If it starts to melt all the way, there is 5 evens as the gamma put wall. So that's, that's a pretty meaningful size. And that will be the next area to look out for if the 520 and 514 zone does not do what I'm expecting it to do. If we start to go higher, GEX2 is the first one from the end of day options chain yesterday that showed enough strength in it. But as I was going through the levels this morning, the level is not nearly as strong, but a lot of people will still be looking at it, especially because we do have the ADR high exhaustion there. So there could be some value in looking at the shorts purely based on the time of day. So once we get closer to either the Euro close or maybe even the COMEX close, there is some value in looking at the failure of GEX2 at 540, maybe a bit of an overshoot, gamma pin, and then a reversal. Other than that, if they start to scream higher as a mean reversion from the previous couple of days of huge sell-offs that we had, I'm looking at 550 as a bigger level. Is that going to come in today? Probably not. So that's more of a weekly thing to consider. That 550 still keeps popping up as a relevant level that the dealers might be interested in. All right, let's have a look at gold. I was doing some reorganization on my algorithms and libraries, so let me just see whether this is going to work. Okay, gold is looking messy to me from the options chain, quite frankly. We have a bunch of things happening in and around this area. Like literally like 3 different levels very, very close together. I'll be honest, I don't like to see that. We have a dual-sided gamma wall around 4,300. And then further up, again, another bunch of things happening between 4,400 and 4,405 and then 4,410. To me, that I don't like to see that. I really don't. The one that's a little clearer is 4,200, and then further down we have this big 4,000 area as the mega put wall. So that's like a protective put from all the participants who are maybe expecting further downside. So once the prices start going below that level, they want to be in profit, right? So it's definitely a protective put. But when I look at the options chain and the put call premiums and relationships between them, they are a little bearish, just a little bit, not too much, but enough to kind of consider them. Maybe there is some hedging going on, protective puts being in place still. And yeah, so the gamma flip is at 42.65. And I know I don't have markers on primarily because I didn't have time. I had to deal with one of my dogs. But yeah, this dual call wall around 4,300 is so dual gamma wall between calls and puts that one might be interesting. It might be interesting. But again, all of these are so close together that I think the market participants are a little bit confused as to what is happening. But it was definitely the institutions unwinding some of the positions, causing the huge reversal. So we've had a big expansion on weakness in the implied volatility. That's never really a good sign, because the implied volatility expanding either on rallies or weaknesses, it means that it's unexpected, right? So even the dealers are like, WTF, like what's happening? And they are scrambling to hedge their positions. So I would still urge caution. We are still nowhere near any kind of resolution. It's all still kicking off, so headline risk is still a thing. But gold looks messy. Copper looks a little bit cleaner. It's just not at the points where I want to get involved yet, but it does look like a candidate for me maybe putting in a couple of trades at some point on it today. Let's have a look at crude oil as well. I know it's a metals markets show, but I do trade crude oil too. So here's crude oil. Crude oil opened up above 100 and immediately stalled off, pretty much creating the high and low in that single candle. The second one created an Asia low. Now, Asia ranges are typically not a thing that's of any kind of probabilistic strength or alpha. But today I am seeing in the main contract, which you don't see here because micros never went above this Asia high, but on the main contract it did. So it kind of went over it and did the classic reversal. So almost behaving like a metal at this point. And I would say that there's probably still some correlation between all of the asset classes, because the wars will impact nearly everything, right? And that's why you're seeing, these odd movements. Sometimes they're correlating negatively, sometimes there's positive correlation, but it almost seems like everything is going in the same direction or same opposite direction as a result of headline risk. And that remains the case for crude oil today. But that 100 level, it is a gamma wall today, and it will remain an area of interest for me, even though I wouldn't be surprised to see some gamma pinning, since they are creating a swing in and around that 100 level. So maybe a 50% pullback to it, maybe we look at the profile, maybe we look at some failed auctions, or maybe if everything is still kicking off, maybe we look to trade towards the next area, which is a mega call wall, all the way up at 105. That is entirely within the day's range, okay? And I know it seems nuts, because the all-time high was, almost 120? But yeah, so I would like to maybe see if there's something after 9 a.m. Central, whether, we have something going on around 100. If not, I would be looking to use the initial balance extensions and some of the playbooks, dependent on the intraday market generated information that will come in much later. I'm just going to place the volume fixed range profile here. This is where the volume value from Friday NYMEX session is located. As you can see, they're teasing it now, but I don't think we've got some super relevant levels here. Yeah, so if we start to fall down, I'm still looking at 95 as a potential area of interest. Whether there's going to be longs or more shorts as a gamma acceleration through that, it remains to be seen. I would be more in favor of maybe some longs, but again, take that with a pinch of salt. It's not advice or anything, it's just my opinion. Since we have had 95 acting as a good support, and it's still there, right? Gamma flip is actually not, this is the old marker, so the gamma flip is now actually at 100. So not only this 100 level stands there as a gamma wall. It's also a gamma flip. So at the moment we're in negative gamma environment. What does that mean? It means that the price action is going to be a lot more trickier. There's not going to be, like, it might mean revert, but it's going to do so in a very messy way. That means broken levels that get reclaimed by a million ticks. It means prices that overshoot massively through any kind of gamma levels that you might have, and then they kind of do whatever they're going to do. So be careful of the negative gamma environment that can make crude oil exceptionally volatile. Micros are the name of the game. When things are moving like 700 ticks per day, you don't need a lot of size, because the volatility accounts for the amount of cash that you can make on that product. And using full contracts on crude is very expensive on prop. It's just, your risk of ruin is going to be like in the billionth percentile. Basically, the blowout percent is so high that there are no other options than you blowing out. So that is why we try to position ourselves in regards to the volatility of the product, not the other way around, not by nitpicking on little stops and then the stop surviving for like 3.5 nanoseconds and then you entering again and again and again until you catch a big one. Don't do that, right? But it's very volatile. It's probably going to be very tough to stay in on anything for, my usual 4 to 6 hours. So the way I'm going to be approaching crude oil is through... so let's talk positioning. I thought I created a new one here and I don't see it. Oh yeah, I have. Okay, I'm going to be using 75 tick stops, starting on 3 micro crudes, only aiming for 2R multiples, which sounds a lot. It sounds like, oh my god, you're aiming for 150 ticks. But remember, we have the space of 700 ticks. So that's like a minuscule amount, right? Now, I would try to add 2 MCLs once we are at plus 50 mark, if I do find a setup. Why? Because the add-on point is not large enough to get me into some kind of a pullback swing. The pullbacks on this particular product, the way it's moving now, are much bigger than that, right? So if you do get a movement, this is a 30-minute time frame, and this is roughly what a 15 tick move looks like. It's minuscule, right? So if you're catching a good movement, for me, the way I do my data, a 50 tick add-on on a smaller size than the initial size shouldn't impact the average entry price drastically. Okay, so that's what we're aiming for. And then we're just aiming for 150 ticks, because I usually do bigger targets. So roughly, about a quarter, a third of a swing. So that's the idea. But in order for me to do that, and in order for me to catch something that's high quality like that, I have to be careful with trade locations. It won't be like, oh yeah, let me just try and catch a few ticks. It doesn't work that way. So I would classify myself as a mean reversion trader who looks for bigger chunks of the market. But when I say bigger chunks, I don't mean that I'm going to be catching 100% or 90% of the full 700 ticks that crude oil has. If I manage to catch 20, 30, 40% of it, I am happy as, I was going to say pig in something, but I'm trying to keep it PG. So I aim to capture a decent portion of it, but at the same time, I'm not going to be swinging for the fences and going, yeah, let's just catch all of it. There are days where you can do that, but with the way the price action is chopping around this 100 level, I don't think it's time, because look at it. I went back in time. Every time we go through 100, we can't stay above it. Goes to touch it, can't stay above it. Goes to touch it, can't stay above it. Goes to touch it. Now, what this is saying to me is that crude oil is exhibiting potentially a range-establishing price action. Crude oil loves ranges. I've seen it range for like years and years and years on a weekly time frame. It was super well defined, and I've been on the lookout for that sort of a price behavior. So that's what I'm going to be doing with crude oil as well. I'm going to try and establish some kind of a new range, and for now we do have a smaller reference just around 91, which is a bit of a random number for me, so I'm not really putting too much stock in this range because it's too small. I actually want to see how we develop this over time on larger time frames, and whether we can maybe establish a slightly bigger range. And at that point I'm going to start doing some options trades that I typically like to run anywhere from 20 to about 45 days to expiry. So they're not zero DTEs, they're not like anything crazy. And for anything in between, I look for intraday opportunities, usually quite a bit later than this, but sometimes we might get a setup as we approach the end of the stream, because then it's pre-market NYMEX, and probabilistically, if crude oil runs to the upside, it has a pretty decent chance of selling off into the NYMEX start. So that is one of the setups that I like to do on it. But we don't have that today. Why? Because we're extending to the downside. This market, even at the craziest times, has a short bias. So you know how equities have a long bias? Well, crude oil has a short bias. So I'm not super happy running long trades outright, unless it's something glaringly obvious, unless it's got a reason for it. A very good macro reason for it. And I don't like Wednesdays, because Wednesdays are inventory days, and just probabilistically, again, they're not great. But on Thursdays, though, if you see a sustained auction that's going one way, don't fight that, because that is the macro coming into the market. Macro and fundamentals generally don't exhibit what they should immediately. It takes some time for the macro side to figure out what they're going to do. They're not FOMOing, they're going, oh my God, let's go. That's the dealer's side. Dealers want to be flat at all times, and they will be the ones adjusting a lot of their inventory throughout the day. They're most active usually in the first hour, but that's not to say that after the first hour they just F off to the pub, right? They're still there. It's just maybe their activity is a little more muted as the day goes on. But I actually like that. I don't like the craziness of the open. I think it's, especially on my products, on equity is a little bit different, but I'm not a core equities trader. I do trade DAX, but we can't trade DAX here, so we're not going to talk about it. With the commodities, you have this really messy non-direction, complete like battle of algorithms, battle of dealers. You just won't find super high probability setups on the majority of the days during the initial balance of gold or crude oil. So just keep that in mind. This is the reason why I stay out, and I just wait for everything to settle, and then I will typically do most of my trading either around the London close. And if I don't really see anything in particular there, or I have a couple of losing trades, I will then actually wait all the way to either COMEX close or NYMEX close. So basically the last sort of half an hour to an hour from settlement, before settlement. So yeah, those are your levels, those are the overviews. When it comes to the downside areas, like I said, on crude oil, it's 95. What you do with it, it's not my thing. I know what I want to do with it, but this is not like, hey, D said go long at 95. I'm not saying that, right? I'm saying 95 is a level that is significant enough in the options chain in order for the inventory to do something, for the institutions to maybe adjust, or for the market makers to adjust. But that adjustment could be in the form of running through it and then massively running through it, as well as bouncing from that level. So it's all contextual, but these are kind of like orientation points that you can use throughout the day to basically just find your path in the madness that we have at the moment with headline risk. All right, now that that's all out of the way, let's have a look at chat. I know that Raphael is here every morning. He's almost always the first person to say good morning. So good morning, Raphael. Body Rock says, hey, good morning from Cyprus. Good morning, good morning. Genius K is here as well. Ario, Kelvin, GTD, how far will silver go? I don't have a crystal ball, man. Like, I can see the same thing as you. I can just tell you what the interesting areas are. I didn't do that for silver because I kind of ran out of time this morning. I went out with my husband yesterday to see Project Hail Mary, and that always takes it out of me because I don't have unlimited amounts of energy, but I can do that for you if you just give me a little bit of time, and then we're gonna do it. So let me just pop this into my algo to crunch data, and then we can have a look at silver as well. What is my purple line? The purple line is VWAP. VWAP. Volume weighted average price. Like a moving average, but better because it has volume in it. A lot of metals love hugging VWAP, as Coach Ray would say. He has a saying, have you hugged your VWAP? Have you hugged your VWAP today? Because hugging VWAP is a thing, especially on gold and correlated products. Alright, so I popped in the information. It's going to take a while for that to chew through, and then we can have a look at silver as well. Alright, carry on. Daniel says, midday to you, D. Almost, it's 11 a.m. So yeah. Trading nickels, thanks for saying that. I checked out the markets last night. I usually like to trade in America on Sunday evening, but I wasn't there for several hours, and I just saw no setups that I would consider. That's growth. Trading nickels, that's amazing. When I hear that from traders going, hey, I looked at the chart, it looks like shit, I'm not doing that. Whereas, you start to trade, even like 3, 4, 5 years into your journey, you're like, no, I'll find something. But yeah, sometimes it's just like, it's flat. Maybe if you're a core range trader, but who wants to sit there on a Sunday night and look for range trades? I don't, right? I want to see some nice movement, easy money that I can kind of hit and run in 30 minutes and then go to sleep. Or if it's a potential for a swing, I can run it on a smaller size and go to bed. Very easy. But I've actually spoken to someone from the industry, and they can kind of see how people are doing stuff. And they said, well, this guy passed an eval, and then I'm watching him, and it's Globex open, and he pops in 15 NQs, like 30 seconds after Globex open, and of course he blew out. It's like, why do you do that? So it's funny how those of us who can see these behaviors of traders, we get very, very emotional about the fact that we see them doing wrong things and getting punished for it. And it's like, it's their money, it's their decisions, it's their, their funded account, their evaluation. You can't really tell them, there's only so many times you can say to someone, hey, listen, let's not do that. But people still don't listen. So trading is one of those things where error-related negativity, ERN, takes a long time for you to figure things out. And it's a difficult battle because it's you versus you. It's not you versus the market. And the market shouldn't feel like a battlefield. Like, if you feel like you're battling price action, the best thing that you can do is just take a smaller loss and walk away. And I know that's easier said than done, but this is why MP created the lockout, because he has troubles with it as well. Like, I don't have trouble with it as much because I work on day trading time zones. So it's like, okay, well, I've had my 90 minutes. I've tried, 2-3 trades here. If they don't work, I'm just like, okay, I'm just gonna, check out, do something else, and come back. But many people don't have that as a behavior. What you have as a behavior is to lose a trade and then immediately go into another one. That is sole product of your error-related negativity response, the ERN response. Alright, this looks newsy, doesn't it? So now I'm seeing copper going down massively, going crazy. This is news. This is news. This is why you want to be careful. Yeah, so crude oil dumping. Let's see what that is. Let's have a little look. I'm not seeing anything just yet, but let me refresh. I'm not seeing anything that is like super red, so that's what we're looking for. So let's wait. But it's funny that this lines up with the time of day when everything starts kicking off. So you can see if you were basing your thoughts on the range that we had, you know, everything's looking nice and quiet and, you know, orderly price action, and then something comes out and it's like smash and you're like, what the hell? But we are at that GEX2 level, so let's see what they do here. You can watch it in real time. I'm not trading this. Every time I see a big candle, it's not like, oh my god, it's moving, I must get in. I always go, whoa, what the hell is that? Let me find out. So it's not like, oh, here we go, Trump on Iran. Of course it's going to be Trump, isn't it? US and Iran have had, over the last 2 days, very good and productive conversations regarding a complete and total resolution of our hostilities in the Middle East. I would be a bit skeptical on the complete and total resolution part, but crude oil is trusting it. And no, so, you know, gold should be falling as well, let's face it, but it isn't. So the metals are rising, gold is smashing down. Now I'm gonna have to redo my levels because I've only done them up to about 90. Sorry, 85. Oh no, I've done them up to 75. No, we're good. So 85, if 90 doesn't give anything, then 85 is technically a bigger call wall, so I wouldn't be doing anything around here. Even if it reverses, don't care. But yeah, anytime you see this sort of stuff happening, your first instinct should not be, let me jump in. It will be, massive candle, what is going on? So he's still talking, Trump on Iran. I have instructed the Department of War to postpone any and all military strikes against Iranian power plants and energy infrastructure for a 5-day period, subject to the success of ongoing meetings. This is what is making crude oil massively dump. But from a structural point, look at it. Touched 100 overnight, wasn't able to get back up there, and now we're going backwards. Is it an accident, or is it just the dealers taking the news to drive them to further interesting points? But I'm gonna wait. I'm not gonna be like, I'm missing out, because you don't want that. That's how you lose, right? Especially with crude oil, they can ping back like one negative thing that Trump might say as an offshoot comment, and crude oil is going to be back over 95. So very, very careful here. But it's positive news. I'm happy for them if it's true. So, you know, he's not going to smash it into any oil-related reserves and stuff for the next 5 days. So, you know, let's hope that they're successful. So yeah, let's see. Trading Nichols also says, what I did find to be probable was for the market to easily go both directions. As someone who's much less of a scalper and wants to try longer moves, even if it's still generally intraday, there's a high risk on a small stop, regardless of the direction I could pick. Exactly. So larger stops, if you're looking for larger movement, is key. You know, many people get stuck into that, I'm just going to use 10 ticks. Like, and imagine trying to use 10 ticks on crude oil in this. So, you know, let's go down to a 2-minute time frame. Let's have a look at the size of these candles. 468 candle size in 2 minutes. And let's have a look at 1 minute and see how crazy that is. So you would have to have a crystal ball. So it's the same. It's the same. 1 minute candles of 470 ticks. Yeah. And now we're at the 85 larger call wall. That was on Friday. Now it's a larger put wall. So let's see what happens here. But yeah, this is the craziness. 540 did nothing. We're at 550 on copper. And we'll see whether this larger call wall here can do something. But in this news, I would now wait until we are... This is an old ADR. Remove that. We will now want to wait until the test of a higher level before shorting again. So not going against the news, just going with a big pullback, finding the area of potential resistance in the options chain, maybe even ADR, but ADR low is already very close to 95, so we'll say 95. And if in the course of the day we now get VWAP that starts matching with that 95, that would be a good area to get involved for me. How? I don't know. Whether it's a long or short, it depends. But for me, largely, I want to get involved, like trading nickels, in bigger potential moves. That means avoiding anything in the middle, and then focusing on the bigger areas. So let's go back up to a 30-minute chart. But as you can see, they smashed into the 85, and whoever was thinking, big short. Now, if you jumped into this, it might survive. It might break through 85, but you would have had to suffer a drawdown of 308 ticks for now. And if they break it back into a long from this 85 call wall, then that will be like, how many of you can comfortably sit through a 300 tick drawdown? Not many, right? Because it means you completely, even if you're not wrong on direction, it probably means you completely mistimed it. So that's what we want to avoid. We want to trade from a position of the prefrontal cortex, not the monkey brain, that is telling us that something's up and you have to take action. You need to train yourself not to take action when these things are happening, and instead go into analysis and diagnostics mode. Then once you realize what's happening, then you go, okay, where are my levels here? And let's now see what happens after. Don't chase. I always say don't chase. But yeah, this is a good sign, very good sign. Somebody's asking for a reset credit. I don't have that power, man. I'm just a trader here. More visible, obviously, because I run a show, but I don't have admin privileges or anything. I can see VIP people when we're running VIPs, but I don't generally have the admin privileges to do anything on the back end, okay? So I'm just an on-air person. Just like you. If I want to reset, I'm gonna pay for it. It's just how it is. We get nothing for free. Alright, let's have a look. Dowd says it's hard to even look at these insane candles. So much money could have been earned on shorts. But that's the wrong way to look at it. Were shorts in your plan? Were you in on a short? In that case, you're golden, right? And that's kind of how crude oil shorts usually happen. You have something, like let's say maybe you hypothesize the reversal from 100, then this happens. Then it's fine. But trying to catch it as it's already happening, you really have to just sit back and not go with it, go at it with dollars in your eyes. Okay, that's never going to work. You have to just go, all right, I'm, taking in the information. Let's see what they do around my orientation points. And this is where the orientation points, as the price is arriving to them, can keep you out of trouble, right? So instead of going short at 85, expecting a bigger move, you go, no, we've already reached that level. So let me sit back and see maybe if we can bounce back to 95 and then back down. But you do have to keep your mind open that these levels are possible. If you don't trust your own analysis, that is going to cause you hesitation, and then the level will be there, and even though you're like, well, maybe I want to run another short from 100, but then the run up to 100 is so big, and you're like, well, there's no way this is stopping. But you have to be a contrarian as a trader. You have to go, we've already had a pretty big movement up to that level. What's the time of day? Do we have less volume? What's the order flow doing? Let's see if those shorts step back in, and then you strike, right? So you can't trade from a nervousness and fear and doubt position. That's what we're trying to train out of you. The whole, I don't know what's happening, therefore, but I see that a lot of money could have been made. It's like, you don't know that. It could have easily gone to 105. What if Trump came out and said, we did not manage to get Iranians to sit and talk to us. Now we're going to intensify our strikes to force them into submission. That would have sent crude oil back to 120, right? So no progress on anything, really. So you don't know. This is the nature of headline risk, that it's always risky and random, and it depends on whatever Trump says, right? That's why it's risky. I don't want to lose money because of Trump. That's like, that's not happening, right? Him opening up his mouth and going blah, 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 blah. The ballroom looks amazing, and all the other random things that he might say. And it's like, don't you have a beautiful, beautiful country? He's a bit of a random man. So, obviously this is heavily related to the current things, but I have my reservations, right? Like the way he said that. He's always going, I have ended many wars. It's like, yeah, and that's true. He was the only person who was able to stop the Middle East conflict in the past. That is true, okay? I'm not saying that. But it's just the way he's like overly confident in things. It's like, oh yeah, complete and total resolution. Really? Complete and total resolution. So you think this is over now, do you? Because I don't, and nobody else does. But the way he structures these words, there are algorithms out there that are institutional and that will catch the complete and total resolution part of it, and then dump a massive amount of crude oil inventory, causing this. But as a human, you can't fight that. You're not an algorithm. You're working off of a delayed news feed, so you don't even know what the hell is causing it. And it comes 2 minutes later, which is, not too long. And for me, I don't care because I'm not a scalper. But for those who are trying to battle it out and to try and catch things, you might get lucky a couple times for sure. But that is not a strategy. That is just like, ho, FOMO, let's get in. Wow, I made money. I don't want that, because that to me would be, at the end of the day when I'm like trying to figure out, a goal that I've achieved. So I don't like the way I do journaling these days. I'm not good at, I know what my playbooks look like. I know what time of day to look for them. The only thing that I'm bothered with is what did I manage to achieve today? Just one sentence, not like, a million things. When you're studying, when you're learning, when you don't know your playbooks, you absolutely need detail and time of day, size of the stop loss in relation to the ATR or ADR. How long did the price get to? Where did you exit? Did you exit early? That is important data points, but I know all of that, right? So for me, the only thing that I want at the end of the day is just to say to myself in just one sentence, what did I achieve today? And, on the losing days, I would just say to myself, I managed to stick to my times of day. Because that's within my strategy, right? That's good enough. That means I stayed within the plan. The end. I don't go into, why did it go wrong? And it's like, no, I know why it went wrong, right? I'm always looking at it from a systematic framework and probabilities point of view. So one day doesn't mean anything to me. What means a lot to me is if I break the probabilities. So if let's say, I know that crude oil failed auctions, unless they happen until the particular time of day, they have low probability of happening at all. So if I'm then looking at the COMEX settlement that looks like a failed auction, and I go into that, on the failed auction side to rotate through initial balance, I'm breaking my own rules. Why? Because I know that data does not support that. So therefore, that would be a huge negative for me, right? But if I'm looking at, late failed auction on crude oil, and I'm going, this is not going to happen. So I'm going to look for continuation. And then I go into that. At the end of the day, I can say to myself, didn't go into a low probability failed auction late in the day. The end. That is my journal, right? But my journals were more like novels in the beginning. Like you got you. I can't even explain to you. It was like novels upon like paragraphs, data points, MAE, MFE. You know how far it went, even if I exited, and if I held the trade longer than I should have. Where is the point that it turned around? Does it happen? So all of that was in my data early on. But now I'm just like, what is a good point that I've achieved today? That's the only thing that I want to see. So, you know, journaling can take that many different forms depending on your experience, I suppose. Yeah. Yeah, see, so Spitz said, no, I was in a long. Yeah, so this is always a headline risk. I'm sorry, but I hope you had a stop. That's the only thing you can do. And in fact, I ended up on shoulder tap when I was still in the live account. Mick was still doing shoulder taps, and I was in a crude oil long. Now, crude oil longs are always painful to me because it's a short bias product. So I was in a long. I was maybe like 100 ticks up, so about $1,000. I was on the full crude oil. It was moving slowly, and everything seemed fine. And then again, Trump spoke. Immediately, this happened, right? So it took me out, but I had a stop. Didn't trail because I don't really like to trail my stops, but the risk was still managed. Mick had a problem with the fact that I was up like 1,200 or something, and that I lost it all in like 3.5 seconds. But that was it. I then stopped. I didn't chase. I didn't try to recover it or nothing. I just went, ouch, dust myself off, and then come back the next day, right? As if nothing happened. But I did end up on shoulder tap because Mick was like, D, if you're up 1,200, you cannot just let it all go, you know. And I was like, did you see them? Like, it happened in 3 seconds. There was no way I could react. So thank the Lord that I had the stop loss. That's the only thing I'm going to say. But yeah, so I felt that it was a bit unfair. I got pulled up, splattered on the shoulder tap. But they have been nice to me in the past as well. Very nice, in fact. So yeah, I just didn't appreciate being like publicly flogged in front of everyone because this kind of a move happened. So it's like, there's nothing I can do. I can't react. I'm slow. I'm Granny D. It doesn't work. And yeah, so again, these things will happen, right? You had a long, it smashed. You might have gotten slipped. So I just hope you were in micros and that you weren't, you know, that you didn't lose too much. So that's the only thing you can focus on now. Don't look at it as a negative. Even if it slipped you, the one positive you can take out of it at the end of today, just say, I had a stop loss in place. Thank God. And go to bed with the positivity in mind, right? You did the right thing. You had a stop in place. You're good. Nothing else matters. Everything else is just a matter of probabilities, headline risk. You have to, you know, move on, basically. Yeah, so always for those who are asking, yo, what happened, what just happened, please have financialjuice.com open. You can log into it for free via Google, via Facebook, via whatever, and it has a delayed feed, but it also still has a pretty decent summary of whatever is going on. It's got a delay of maybe a couple of minutes, maybe a minute. For the zero delay, that costs a lot of cash, so I would not spend money on that. But for those of you who are constantly wondering what's happening, especially during times of headline risk, you absolutely must have Financial Juice open somewhere. I always have it on one side of my screen. So when I see a newsy candle, something that's like crazily moving, that's not normal, okay? That just doesn't happen out of the blue. But it will happen when he is speaking, especially when there's war. But even when there isn't war, right? Trump has this effect on price action. It was like that during his last term as well. And it was annoying because you would have a great position. Or on the other side, it happened to me quite a few times that I was, let's say, short crude oil. Then he would open his mouth and my target would just arrive. And I'd be like, so I'm done now. Okay, I can go and nap or play video games or something. So it's, works both ways, especially on shorts. Because, everybody wants to see the resolutions. So again, this is why I said crude oil is a short bias product. There it is. Yeah, so growing meds got lucky. There you go. It just closed 5,535. So you got done by the positive side of it. It's like, yeah, it might have slipped you, but that means that you had a great day. Awesome. So now you can close down the platform and go enjoy your day. You made over $5,000. That's got to be enough, okay? Don't now get into, oh yeah, let me make it to 10. Don't do that. You made $5,000. That's like dreamland for 99.9% of people in the world. You've done well. Go, pat yourself on the back, and enjoy the rest of your day, okay? Don't give any of it back. Don't give any of it back. Be very stubborn now. All right, let me just catch up on the chat because there's a lot. It's so late. Yeah, imagine don't have a stop loss. Yeah, game over. Absolutely. Yeah, that's why we always have stops. I wasn't in a position because I know that usually he wakes up and he opens his mouth and he starts talking. And it's like, just sleep. just sleep. Like, wake up at a normal time of day. But no, politicians always have to yap when it's like extraordinarily early. And people are just waking up and then you get a tape bomb. However, luckily for me, didn't even start my day. We're all good. Now I have context. Now I know where they're bouncing from. So large core wall from last week, by the way. That bounced. So that was the stopping point. That is where the hedging happened. And I don't think that we're going to turn around and go past 100 in light of this news. However, now that's telling me that I should probably keep my longs over in the bag of what not to do today on crude oil. But again, we get to a very, very late time of day if we've been kind of gradually dropping and we're still not breaking through 85. I might do a long into COMEX into NYMEX settlement because it's crude oil. I might. And likewise, we overshot 550 on copper, but now it's under it. So the way to read this is that at the moment, at least for another 1 minute 27, if this wick remains so large, look at how big it is. It's bigger, it's coming to like almost half of the candle, but anytime I see a wick on a 30-minute time frame that is bigger than a third of the overall length of the candle, I'm really not gonna go long through it. And usually it happens through the gamma level and then they kind of start to go back. So I would read this as a rejection of 550 still. So therefore, I might, like if I'm looking for longs here, I want to see a retest of Tokyo high, at the very least. But for now, they're not able to sustain with the headline that came out, right? So they're not able to sustain longs. They're failing. It doesn't mean that they may not continue, but at this time, it was such a big move that the dealers stepped in to hedge their positions and now they're bouncing off. So yeah, be very careful. This is what I'm saying. I want my setups to be mint today. Maybe not like, look, star setups, I'm not really in favor of that. Oh, it's star setup. I only take star setups. Again, don't do that. No setup is fully qualified. And a lot of you have too many things that need to line up. I only need 3 things to line up. I need a strong level that makes sense in my strategy. I need time of day when the probabilities for such a move are high. And I need order flow to tell me, yeah, other people are looking at this as well, let's go. Because I don't have the power to move the markets. Even when I traded with a lot of size, that was still minuscule compared to what the institutions are doing. So we have to follow whatever the dealers or the institutions are doing, not the other way around. They don't care about us. Contrary to popular belief, Goldman is not sitting there watching Topstep TV and watching your accounts on Topstep and going, I'm going to take your stall. Yeah, that is what if they're taking your stop, it means your stops are always at a crappy place. No argument. So if you place the stop on crude oil, let's say for longs, at 85.10 or 86.40, what you're doing is you're asking for it. Why? Because the large core wall is at 85. So if they really start running it down, they're going to take that. Absolutely, they're going to take that. So get better at placing stops. Similarly, over in let's say gold, because that one's a little bit easier to digest. Let's say you were shorting from VWAP, because that was a setup before the news. You were shorting from VWAP. And you're like, okay, well, I'm going to place my stop right above 43.30, so right at VWAP. Even if they just ran through VWAP then reversed, that stop loss was too small. Why? Because gold is a slippy product. Gold is slippery, just like crude oil is slippery. And it will run through areas before reclaiming them. So you need to account for that. One thing that I used to do is go back using my reference level to see by how much it overshoots. And then I would get an average, and then I would place my stop away from that level by that average, expecting a run through. What I do these days is a little bit different because I expect them to run through it, and then I look at bookmap for the actual reversal, so I actually get better entries because I'm better at figuring out the timing. But when I didn't have that skill, my workaround was to get some data behind it and then just place a stop that would account for the overshoot of the level that ultimately ended up working. This is where hindsight is actually okay, because you're working on historical data and then deriving an average from it, and that's all right. But if you're working on the basis of that, it lost 2 times, it ran through VWAP, then reversed by like 35 ticks, that's only 2 sample sizes. That means nothing. So you really need about 3 to 6 months worth of data on the particular setups. When it touches VWAP, what does it do? And, that kind of analysis in hindsight is useful because you're working with a framework. You have a level, you have an expectation that it's going to run through it. You're just looking for how much does it overshoot by on average, and how much room you need to give it, or how much time also, because let's say you run through VWAP but it hasn't reached that average. Don't even look at the reversal. So only look at a reversal, and the way you would do that, you would maybe take, like, let's use copper. So maybe take, let's assume that copper overshoots VWAP by about 70 ticks, right? So what you would do is you have VWAP, but you also know it overshoots it by n number of ticks. So then you wait until it overshoots the average, and then you look for setups. So you modify the entry point in order to get better timing of it. Does that make sense? Just some ideas. So yeah, so let's wait and see what they want to do around this 550 area. I mean, this is 160 ticks of risk, so I'm not happy with that. But we might fade this, I don't know, we'll see. I would prefer to get Tokyo high and then longs with this move, but just the fact that they are struggling around this 550 area, that could be interesting. Don't really see too many people. There's some buyer exhaustion, but that could be just a breather before they take it through 550, so we need to be careful of that. But at the same time, if the 85 on crude oil was a reversal, maybe they start running it down in copper. I mean, Delta's gone very negative at the moment. And where's the next level? Hold on, let me have a look. Okay, the spread keeps pushing slightly higher, so I don't like that. On the upside, so I have that 550 gamma wall to the downside, right? But I also have 560 gamma vol, which is like on the call side. And they just missed it. So maybe if I'm gonna do shorts, maybe that would be a better spot. But it depends what happens. We have another 20 minutes or so to hang together. So we might get something that's obvious. And when the setup is obvious, it will become obvious, right? So I don't need to kind of wonder, ooh, is it 550 or 560? No. At the moment, we have a sustained auction to the upside on copper with a strong single print left behind. Potential for headline risk to continue what they started despite the selling wick. But also potential that 550 is already high enough and they can't go any further. Now, there's more news. Okay, so we stay out of the shorts. Because it still looks newsy. And in fact, if anything, it's going to be maybe a quick rise back up to 560, which we narrowly missed. Yeah, they're pushing higher. So what I'm doing here, I'm just kind of trying to figure out the momentum side. Because we do have a strong auction. We overshot ADR, so this is now turning into an outlier day. And if they manage to get back into the single print higher, so this is a wick, but also single print. So if they carry on chewing through it, this is going to be nothing but an initial blip. So right now, I'm still not sure. And if I'm not sure, I stay out. I'm just talking through my thought process, right? This is what you need to do with yourself. Ask questions. Engage the rational part of your brain by asking questions and then answering them as well. And this is where streams are awesome, because I do talk to myself, but unless if I'm not talking to myself, I need to write things down as they're happening in my brain. Otherwise, I get stuck in my own head, if that makes sense. So I want to make sure that I'm making the right decision here. If I make a decision, I might do nothing. I might not like any of it. So right now, I was seeing some big velocity push that failed. So longs are not grabbing me. If they're going to go long, I need to see more commitment. And they're still under that 550 level. We should be above 550, maybe retouching it again and then continuing. And trying to go higher above 4400, which we also talked about. Have I considered doing an audio pack? No, but there's some voiceovers that they want me to do, so they haven't asked me to do an audio pack. That's just Hogue. Order filled. Voltage says I just made 2,500 off a micro 3 with that push up. Love is king. Exactly. So 3 micros gets you 2.5 grand. You don't need a lot. It's the beauty of headline risk, right? It's like trade small, bank big. Volatility is what it's all about. Well, yeah, look, we need reasonable volatility as an overall thing. But, headline risk is a different type of volatility. Headline risk is like tape bombs all over the place. And it's just like, get in, get out. If you survived, kiss the ground that you walk on and go do something else. Gonna bet his cronies made a killing. Hey, yeah, I don't think that they're allowed to trade if they are related to, like, even when, because my husband worked for bulge bracket banks, and the only reason why I was still able to trade was because we weren't married at the time. Luckily, by the time we got married, he was not working for bulge bracket banks. Otherwise, it would have been seen as, even though he wasn't a trader, he was a, software guy, pretty high level though. I wasn't allowed as a wife. If he had stayed there, I wouldn't have been allowed to be a trader. Go figure. Big Loose is complete and total lunatic. I mean, he's the president. I wouldn't call him, I disagree with a lot of things that he says, but he is the president. So, yeah. Crypto Trade says, good morning, Dee. Good morning, Crypto Trades. Very good to see you. I thought it was over 10 days ago. Yeah, exactly, right? So those comments is what makes me doubt his whole, yes, it was over. It was over in an hour. It was over in an hour. Like, what are you talking about? All right, I'm going to try a small short here. I don't want to get stuck in a huge position. I'm going to do half the size. So we're going to do micros. What's happening? It's not letting me do anything. That's weird. That's very weird. I caught into a position. Okay, well then we sit. Like, it was literally like 2 micros. What the hell? Did we stop trade? Did they freak out? And then did they suspend copper trading? That might be trouble for me. No trade, guys. It's not letting me enter. So we just sit and look pretty. So yeah, I don't know what that's all about. So again, best to sit it out. It is Monday. We have a whole week. But I do hope that they didn't completely suspend copper, because that would be a big hit for me. It's my main product. Deeyana liked you before, but you obviously hate for Trump. I don't hate Trump. I think he's hilarious. I really don't hate him. There are people who are like, he needs to do. I don't think so. Look, I completely agree that he stopped. He was the only US president that actually stopped the wars. I don't hate anybody, man. I really don't. I just think that the way he talks is more suited to a stand-up comedian, and I think he knows that as well. I don't think that he's somebody who should be taken ultra seriously. You can see it, like, people think that he's demented. I don't think so. I think it's all like, he's in a meeting, he stands up to a window and goes, I love what you have done with the place. And I think he knows that irks people. I think he's a very good manipulator. I respect that. Look, I totally respect that. I don't hate him. I just think that there are some odd choices that he makes as the president of the United States. But if you don't want to watch me, that's fine. I'm probably the person who has the least amount of problems with him. I don't care. He's not my president either. I always thought he was hilarious. I always remember him on SNL skits and stuff. And which other president did that? No others. So he obviously doesn't mind having humor. Again, we have to respect that. But, as a president, I do find some of the things that he says with overconfidence a little bit over the top, that misleads people into thinking that something else is going on. So that's the dangerous part with him. Like, for example, saying that the war was over, like, an hour into it. Obviously it isn't. We're still here 10 days, right? Now he's saying complete and total resolution. I would doubt that. I'm allowed to doubt that, right? If you think that's hate for Trump, then you shouldn't be on this stream, because you don't get what I'm saying at all. And that's okay. You don't have to like me. In fact, as a semi-public person, I know that many people will have a problem with me, and I'm going to say it, I have a problem with you posting comments like that. So if you continue to watch the stream and you are mean to me, that only leads to one place, okay? Right, let's look. Am I using Mentor Q here? So, Mentor Q is a great service, right? But I have my own algorithm. So I use extra stuff to give me anchor points. I'm not looking for any and every level. I'm looking for bigger potentials for reversal by looking for anomalies in the chain. That's the only way I can describe it. I'm not going to tell you how I do it because it's proprietary and it's intellectual property. But yeah, I have my own way of figuring out which areas are more likely to give a reaction after a bigger move. Does that make sense? Sam says USA and Iran are going to kiss and make up. Let's hope so. Like, everybody needs to hope that will happen, for sure. Z3N says, I still don't know what made that move. Okay, so I'm going to reread it. from Financial Juice when we were talking. It said like this: Trump on Iran. US and Iran have had over the last 2 days very good and productive conversations regarding a complete and total resolution of our hostilities in the Middle East. So that was the first one. That's when crude oil started smashing, gold started rising. And then he says to postpone all strikes against Iran and against Iran's power plants. So that's good news for crude oil, but that means lower prices, right? So it's good news. So that's the main sort of news that, So Trump back, and then further on, Iranian embassy is also reporting in Kabul. Trump backs down from attacking energy infrastructures after Iran's firm warning. So what does that mean? Firm warning. So they gave them a warning. They went, all right, we won't bomb you. So how is that complete and total resolution? But I'm glad they're negotiating. I am glad. So. Yeah, Trump is liked because of his frankness. Yeah, I agree. Yeah, he doesn't have, a filter. It's just like he's going to give it to you. So yeah, I don't have a problem with comments like this. It's like he's honest. Painfully so. Probably way too honest. But then also some things that he says are overblown as well. So it's like, yeah, he's honest, but he's overly confident. All right, so the short that I was planning would have worked, but, we need to see why this is not happening. And Biden couldn't talk. Yeah, he had different issues. He's very old, man. Like, I don't know. When I'm that old, do I want to run in any sort of powerful positions of that sort, where it's like a lot of travel, a lot of talking, a lot of standing up, a lot of walking? Man, I struggle with that now at 45, let alone, when you get. I mean, I just hope that I'm not a drooling mess in a old people's home at their ages. So, full props for maintaining some amazingly ambitious careers well into their old age. But Biden had his issues. Every president has their issues. You can nitpick on everybody. Nobody's going to be perfect. And, some of the presidents that were very likable, they ended up bombing my country and my home city. So, what, am I supposed to hate all of them? I don't. It was just a matter of circumstance. And, so out of all of you who are talking this or that, unless you've actually been through the war, because my city, Belgrade, was bombed by NATO. That was my teenage years. I was 19, 20 at that point. And, at the end of the day, we're all sitting in our safe environments. We don't really know. I know, but most people don't. And I pray that you never find out, because it was one of the biggest tragedies of my life. And it's not easy, because I can see it from both sides. I can see it from the people who are getting bombed, and I can see it from the sides who are assaulting, because they see a greater good in that, okay? And I'm probably the way I am because of that experience. So there's goods and bads, good and bad. There's the positive that I'm an extremely strong person because of it, and that I need a huge thing to happen that's life or death in order for me to emotionally react. And that goes for trading as well. I'm pretty sure that I wouldn't be able to withstand risk if I didn't go through the horrid experience of getting NATO bombs falling on my head, okay? The riddle says, Biden is 100 years old. Yeah. But hey, William Shatner, 95, man. 95, he looks amazing. I'm sure he's had work done, don't get me wrong, but I'm a huge fan of Star Trek, and to be 95 and to still be super functional and, cognitive and funny and doing interviews and that's kind of who I want to be, but I'm kind of falling apart already, so I don't think it's gonna happen. But yeah, so full respect. Damn it, it would have been good, but I can't enter. That's fine. Imagine if we had Kamala. Yeah, I mean, again, I don't mind her. I don't mind any politician. They're doing a job. they all have their own style. So whoever's there, we just work with whatever you got. But, to heavily express, favoritism or hate against any of them is completely pointless. We don't know them. Nor will we ever know them, right? So what is the point? You're just bashing somebody you don't know. Kind of like what trolls do to us. On a much, much lower scale. We're just tiny fish in the sea. But you always have people who are like, I know what you're about and I don't like you. It's like, alright dude, just go and live in your mother's basement. I don't care. So, people who I've never met and never had a proper conversation with, especially, they don't interest me. I will say it. Whatever their opinion of me is, it does not affect my life in any shape or form. I am a housebound person, don't really go anywhere. I go dog walking, I like video games, I'm a nerd, I like trading, so it's like, how does somebody's comment affect me? It doesn't. The only time I will be a little bit more sensitive is if I've got like a massive migraine or something, and then I'm just not very nice, because my tolerance for nonsense is very low on those days. And you'll probably see it as well if you're with me long enough. Suddenly D gets all like low blows to the trolls. But it doesn't happen often. I'm mostly pretty pleasant. So, yeah. But I'm not a doormat either, so yeah. Man Cave Trade says, just started my 5-day fasting that helps with inflammation. Hopefully that will help with longevity. It also helps with the dopamine spikes and crashes. Now, don't put too much stock in it because the study was done on mice, not in humans, but mammals. So mammals, maybe there's a lot of parallels. Obviously, two very different physiologies, but functionally we're pretty similar. So they did a study on mice to see how it affects dopamine levels, and they found that the dopamine was completely leveled out after 30-day fasting, which you can kind of trick your body into by doing ketosis, so just eating fats and protein and not like zero carbs. Very difficult to do because I've been keto for like 8-9 years, and you have to be very careful with your electrolytes. Otherwise, the headaches on it are epic. However, the massive positive trade-off is that your dopamine levels can neutralize. So if you struggle with that, that's something to consider. Just don't do it without either a nutritionist or somebody guiding that, especially if you have a medical issue, okay? So always be safe whenever you're doing something to your thing, to your body. What games? Okay, so before my health issues, I actually really enjoyed things like Assassin's Creed. I loved all of the games, like Halo was a big one. But then somehow first-person shooters and fighting became a bit much for me. And for about 2 years, I couldn't even do video games, which I really missed, but it was just how it was. Now I'm really enjoying a game called Satisfactory, which is all about being on an alien planet, and you start with a crafting bench and you start building like little things. But the whole point is that the game keeps pushing you to try create these like mega factories with enormous amount of mined resources which you can automate down the line, but you start with like a little crafting bench and going ting 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 ting. So now I've played it for like quite a few months, so I've got I've got 3 cities that I've built on the different parts of the map, and I've got a train connecting 2 cities. But since then I've upgraded to drones, so I've got drones flying all over the place. It's such a cool game. It's very much, it's not like, oh, let's just put our mind to pasture. You actually have to think, because there's a supply and demand. You have to mine just the amount of resources. You have to make sure that the coal burners and coal power plants are getting a sufficient amount of water. And coal is not a problem, but water can be a problem because the physics kind of, if you have a pipe going upwards, then you have to put some pumps in it. It's just like, it's so good. And I've been totally obsessed with it. So that's what I do in my spare time and my weekends, that and dog walking. But hey, yesterday I actually left the house, so I saw Project Hail Mary, loved it. I know about the book and stuff, but I didn't have capacity to read because my eyes would be very sore and stuff. But I know what the book differences are. However, I love the movie. I thought it was done very well. I think the choices they made with literary differences were well done. And I thought that it's probably one of the best sci-fi movies that I've seen in like years. Because I don't like movies like Avatar and stuff. I think that is boring. You're sitting in a cinema and it's very loud and it looks great. But you're like, for Christ's sake, will you just move on the story? I don't want to see like, you know, ocean worlds for 2.5 hours on Pandora. Like, just get on with it. So I just feel like that's not for me. Even though it has the space and the aliens and everything that I like. But man, Project Hail Mary, like, awesome. Absolutely awesome. So, very funny, well done. Obviously you have to swallow some of the science bits that are a little bit out there, but that's why it's science fiction and not documentary. But apart from that, I think it's like, it was super enjoyable. Like, I have not seen a movie that I enjoyed so much for a long time. So yeah. Alright, we've got 4 more minutes here, guys, and then I have to bounce to make way for the main daytime show. I think you will see me on group coaching. I should be on Monday, Wednesday, and Friday usually. Sometimes that changes, but let me just double check, but I think that's the time. Yeah, so I'm on group coaching today, so we will be seeing you again. It's gonna be me, Gabe, and Anne-Marie. Always a good team. Looking forward to seeing both of them for a good old chatty chat. Why would gold spike up on this news? You know, copper spiking, silver spiking, everything. We're just in a situation where they went into a negative correlation. The gold has been very odd since COVID, right? So we always expected, according to the old portfolio theory, to have things like equities down, gold up, on risk off, but we've seen that it's not always like that. So during COVID, we had both going down and then both going up. So it's like, what's happening? And now we have days since this whole Middle East conflict started, where they are going in the opposite direction, but other times they're going in positive direction. So I think that's the same thing, interplay that's happening between crude oil and metals. But yeah, well, nice to know that my little trade would have worked out. I need to figure out why it's not letting me go in, even on like 2 micros on copper. I don't get it. Anyways, I'm gonna finish it here. Alright, well, we've got one more question. Let's do one more question. Lebecker. Hey D, after a big move like that, what is your advice for new traders? Sit and watch. Somebody told you already. Kraz 1825 said probably watch the action, sit on the sidelines. Yeah. Have some levels, so don't just like sit there and go, yeah, this is great. Have orientation points, well, however you do your orientation points. Support, resistance, Asia high, low, bigger supply, demand areas, like whatever you're using at the moment, just plop them on your chart and then observe how the price action is behaving. I would also advise you that you have 30-minute time frame at all points, 4-hour time frame on another one, and then maybe a 5-minute chart just to look at that slightly more zoomed in level of how the price is actually behaving around your levels. That's never going to look the same, okay? But a reversal and momentum that follows it is always going to look similar. Just don't be super pedantic around it. I find that a lot of people now are like, we need to be super precise, and it's like, no, you don't. Because then you miss out. If you're looking for very, very specific things, you won't trade much. So be sensible with the conditions, but mostly just take this time to observe and to gather experiential data. And that means observing things without actually being in a trade. That's the advice for very new traders, right? If you're further down the line, you get to a point where that just doesn't work. You actually have to trade to advance your skills, and then later on you also have to get into the funded account to start dealing with your emotional regulation. But many people balls up that part, and then all hell breaks loose because they think it's going to be the same as the combine, and then it isn't, and then there's time and chaos and entropy that steps in, and they're not prepared for it. So today, sit and watch, write things down, ideally on a piece of paper, not typing it out because the brain works differently, and just gather experience of how headline risk is affecting these products. That's all I have for you today. Thank you so much for sharing your time with me. I will see you again for group coaching. In the meantime, this was the Metal Markets. I'm Market Stalker D. Take care.